When it comes to tax planning, I know a lot of us are just like deer in the headlights, right? I mean, it is so hard to read through and decipher all of those tax codes, especially in today's day and age when there are tax laws that seem to be changing every single month. It is definitely hard to keep up with, and I know that I find myself on the IRS's website in my spare time just kind of reading through things to make sure that I am feeling updated, and if there's anything that I need to do more research on, that I take the time to do that. So in today's video, I'd like to just chat a little bit about some ways that we can all do some tax planning for ourselves and to better our futures. Hi, my name is Adrina. I am the owner and accountant here at Accounting by Adrina, and I'm so excited that you're here today. We're just going to have a little bit of a chat, and I'm going to talk through a few things that could be helpful for us when it comes to tax planning. But first, the disclaimer. This video is meant for entertainment purposes only. This is not tax advice. This is general info I learned along my way of becoming an entrepreneur, so please use this as my opinion. Please always consult a tax professional for specific advice geared towards your specific situation. All right, now that we've got that out of the way, the first thing that I really want to talk about is how when we are considering tax planning for the future, because we want to make sure that we're doing the best that we can as far as lowering our taxable income, lowering our tax bill, right? I mean, no one wants to pay their taxes. Sorry, IRS, but it's just the truth. Okay, so the first things first, if you are in a traditional 9-to-5 job, then tax planning starts with a W-4. Now, when I say a W-4, that's when you first get hired. It is the paperwork that you fill out in order to get onto their payroll and to know what deductions that they're going to take. So that's really what they're going to use to find what your taxable income is, the percentage, and it can vary between workplace to workplace, but basically there are tax tables out there at the irs.gov that you can look at to see where you are as far as your tax rate is concerned. So that's really the percentage they're going to use to withhold the money from your paycheck so that it goes to the federal government, Social Security, your state, etc., right? So when you look at your paycheck stub at the end of each pay period, you would be able to delineate exactly how much was withheld from your paycheck. So why I'm saying this is because there are so many things that go into your traditional paycheck that can actually really help lower your taxable income. For example, if your workplace has a 401k or a 403b, if you're a nonprofit, then you have the ability to contribute pre-tax dollars into that investment account. Now, sometimes there are workplaces where they do the investments themselves, and so whatever money is in there, there's already kind of like a place that will be invested after your contribution is made. Are you tracking with me so far? I just want to make sure everyone's on the same page. So once those contributions have been made, then they do that percentage that I was talking about earlier on your income, and then that's what gets withheld for the federal government. So the idea is the more you put away into those tax advantaged accounts, the better it is for you when it comes to tax planning, because not only is it going to lower your taxable income, but it is also going to set you up for a retirement account. And that is pretty much your start of your savings plan. So that's really where you're going to find the most benefit. Now, when it comes to those who do not have a traditional 9-to-5 job and who are self-employed, then we have to do our dirty work, so to speak. So we have to be the ones to be proactive at finding those tax advantage accounts and sending money over to those accounts. Now, for the self-employed individual, like Mrs. needs to file her tax return, she has a 9-to-5 job, but she also has self-employment. So if she has the capability to put some additional funds into an IRA account from her self-employed taxes, that's really going to set her up for a lot of success down the line. So one of the things that I do personally is to automate all of these things. So when I automate my contribution into my IRA account every month, that means it's one less thing that I have to worry about. Now, I budget for it every month, and occasionally it'll change, according to how much income I received, vice versa. So for example, February March of 2021, I received the stimulus. And so I put a good chunk of that stimulus over to my IRA account almost right away because it was money that I wasn't planning on. It was money that I didn't budget. So I just went ahead and made that call and just made the transfer. So I didn't have to worry about it down the line. And I also didn't get tempted in spending it. So that is the key, right? We've sidetracked. Let's get back to the main point. The main point is when you look at that W-4 for your workplace, you want to make sure that you're doing your due diligence with filling that out, asking all the questions that you can, making sure that you're getting the most bang for your buck when it comes to your paycheck. Now, if you are curious down the line, if you're withholding enough money from your paycheck, the IRS has a very nifty tool called the Paycheck Checkup. And I'll leave a link below for that, but you can basically walk through that link. It's kind of like a flow through sort of thing where the IRS says, okay, how do you file on your tax return? Are you single, married filing jointly, that kind of thing. And then it walks you through each step of the way to see if you're withholding enough money at the end of the day. Now, when I was at my traditional 9-to-5 job a few years ago, this was something I did on a regular basis. I think I was checking in with this paycheck checkup every quarter and making sure that I was contributing as much money as I can to the tax advantaged accounts. They had a 403B at the time. And so I would just put as much money as I can from each paycheck into those tax advantaged accounts so I can get that tax benefit, so I can set myself up for retirement down the line. Now, the last thing that I want to talk about, because I want to make sure that these videos are to the point, they're sweet, and they can be easily digestible. So I'm not going to go too much into detail for this one. But the next point that I wanted to make was if you have a life event that is going to happen or that has happened, I really want to encourage you to do as much research as you can on your own to educate yourself on what the tax implications are down the line. So here's my example for you today. A client recently called up and was wondering why the refund that he was getting was low. I mean, in previous years, the refund that he got was a few $1,000s. And so he was explaining to me the reason why he was so curious about this is because he had planned to use his refund as a type of savings account for himself. So what had changed was his child had passed the mark where he could not claim his child as a dependent. Not only that, but that child was also now in their 20s making a lot of money each year, So it wasn't like it was anything that he could claim as a deduction. So when it comes to like those types of deductions, if you're planning on buying a house, if you're planning on having a kid, if you're planning on getting married, so all of these life events are going to trigger a tax event. And so I have a blog post a little bit more in detail about this. So I'm going to go ahead and link that blog post as well below. But I want to make sure that you're doing your research when it comes to those types of life events and trying to figure out what kind of tax event is going to happen for those life events, how that will affect your income and how that will affect your taxable income down the line. So do your research, and when all is said and done, if you are going to be hiring a tax professional to help you out with tax planning, to help you out with filing your tax return, I would highly encourage you to still do your research because let's just say we're not all perfect, right? I mean, people make mistakes, and a tax professional can certainly make a mistake on your return as well. So with that said, I want you to make sure to do your research, get all your notes that you can, and dig into these topics as much as you can so that you can be an informed person down the line, so that you're not shocked when it comes to your tax refund being $400 or $500 because you didn't set yourself up for any kind of tax planning. So I want to make sure that you're doing your tax planning, but also as a sidebar to that story that I told you about where he was receiving less in a tax refund than he was planning on, I gotta tell you, that's really not a savings plan. A savings plan is something that you're proactive about, that you're kind of working towards every month, every paycheck, whatever the case may be. In fact, when it comes to my savings accounts, yes, I have more than one, I automate everything. So for my personal accounts, my personal checking account automatically deposits money every month on the same day into my personal savings account. The same exact thing happens for my business, and the same exact thing happens for my retirement accounts or my tax advantaged accounts. And I do have a high yield savings account right now, and I'm leaving it be because the Fed has not changed the interest rates yet. So I'm waiting for that to increase. When that does increase, I'm going to go ahead and move some money around and kind of take advantage of that as well down the line. But for now, what I wanted to leave you with the thought is to make sure that you create a plan and that you start working towards that plan every paycheck, every month. Check in with your paycheck every quarter if you can, and see if the amount of money that you're withholding from your paycheck is going to lend to tax planning down the road. So take advantage of as many tax advantaged accounts that you can. That is going to be my general advice to everyone. And do your due diligence, do the research, and do everything you can to get all of the information at your fingertips. Google is a very powerful thing, and we do have the information at our fingertips, and it's just a matter of collecting that data and interpreting it to our own personal situation. All right, friends, now if any of this is really confusing to you and you're still curious, you still have questions, remember, I do have a service available for Accountant for a Day, and I would be happy to provide you one full day of service where I look at your numbers and I do a cash projection for the past 6 months or the next 6 months or whatever the case may be. The service is called Accountant for a Day, and so you can also find that with the link below. And make sure that you give this video a thumbs up. Make sure you're subscribed to my channel, and I have some exciting YouTube videos coming down the line, including something that will explain what this is. All right, friends, I will see you in the next video.